In equities, they took a little bit of a spill. Julie called it a blip. They have since largely recovered and were little changed. But if you look at treasuries, the 10-year yield, for instance, went negative and it's still holding down.
I would say probably blip is the accurate term. There's no, I don't think any question about that. The market did move down on that news, though. We were talking with folks throughout the day whether or not this is sort of somebody kind of reading these headlines and saying, look, what does this mean about the future of policy, all that type of stuff. There's also the idea that there are algos now that are basically looking for this type of stuff. I have a little bit of more difficulty buying that argument. I'm not sure if algos, if it's possible to write code for what's going to come out of the Trump administration. I mean, are you, programming for Russian lawyer names? Like, I don't know. We had a discussion on our team, and we didn't really get a lot of great results on that. So I think probably what happened is people saw this, they started thinking about the implications, whether or not it means. And then ultimately, this does show that the markets do react to politics. I mean, here's a chart just kind of looking at what happened today. There's our little 30 bip dip, if you will. But then take it back to May 17th. And obviously, the market there had a little bit of a sell-off as those Comey revelations came to light as he was under testimony. And I think this, again, just speaks to this idea that while we've sort of stopped talking about the Trump trade and all this and all that, it's always worth remembering that, look, there are still markets and capital that was basically allocated to certain parts of the market after November 8th. Yeah. That while it stopped, it didn't really decline. I mean, I think there's probably still air to be let out of some of these areas of the market.
It also speaks to how nervous people are about the prospect of a bigger correction. Yeah. Everyone's been talking about how asset prices are high, including Fed officials themselves, and how perhaps you need to let some of the air out of the prices, to borrow your phrase. Yep. And this is as good a reason as any to go in there and perhaps sell.
I think that's probably a sound observation, because ultimately what it boils down to is a market that is still is highly valued. I mean, we just did a story yesterday from Leuthold and Doug Ramsey over there looking at how similar right now looks to late-stage bull markets. It's just very similar. There's a lot of things out there where you have high valuations. You look at an S&P that trades where it does, and it's significantly above the 20-year average. Is it toward the highs of dot-com bubble? Not quite, but it means that people might be a little quick on the sell button, and especially when you've had an otherwise sort of vacuum of news where there's not a lot of news flow, kind of just waiting for the Fed and all this stuff. Some of these might get people a little jittery, I think.
It takes